Good day, attorney. I am Benz Garrett Shamili Kaingin and I am from Group 2. And muna siya ako ang individual viewing or kanang listen about sa individual activity, deductibility.
Good morning. So let us discuss about the remaining deductible items. So you have, let's start with bad debts. Bad debts is defined as are debts due to the taxpayer when actually ascertained to be worthless and charged off within the taxable year. So they refer to those debts resulting from the worthlessness or uncollectibility in whole, no, ang uhoy nga utang, or even in part partial na utang dili na ma-collect, and it is considered worthless. So it is an amount that is arising from money being borrowed or from dili lang gid ma-collect na amounts of income from goods sold or services rendered. So let's go discuss each of these requisites for deductibility. Now, in order for bad debts to be allowed to be deducted, these are the requirements for its deductibility. Number one, there must be an existing indebtedness due to the taxpayer which must be valid and legally demandable. So meaning the indebtedness must kinahanglan utang, existing utang, no? And it is already due to the taxpayer. Meaning if it is, like for example, it is due last month, no, ang utang. So it is already due and demandable. No? And what else? It must be connected with the taxpayer's trade, business, or profession. It must not be a personal debt to the taxpayer, but it must be connected with the taxpayer's trade, business, or practice of profession. The same must not be sustained in a transaction entered into between related parties enumerated under Section 36B. The same must be actually charged off the books of accounts of the taxpayer as the end of the taxable year. Kinahanglan i-charge off siya sa books of accounts of the taxpayer as of the end of the taxable year that it is worthless to or the taxpayer cannot collect it anymore, the debt. The same must be actually ascertained to be worthless and uncollectible as of the end of the taxable year. So let's, number one, existing of a valid and subsisting debt. That is the first requisites. A valid and subsisting debt is one, the collection of which may be enforced in court. A debt which, like for example, na ay utang, as I said, that is already due, meaning the creditor taxpayer can already collect, no, the debt, but due to the fact na that it is uncollectible, no, it can be considered as an allowable deduction under bad debts. Now there are also certain instances wherein ang utang, dili pasabot ng utang ka, lifetime pwede makakolect ang creditor because if the debt is founded on a written instrument, written contract such as a loan agreement, mo prescribe ka na ang imong pag-file sa kaso within 4 years. Na ay prescriptive period ang pag-file ng action if it is founded upon a written instrument. Kung dili naman, then you have 10 years. Akong pasabot kung nangutang ko sa imo, then you fail to collect within 4 years from the execution of that document or instrument or contract agreement, then you can no longer collect from me because your right to file an action to collect the debt has already prescribed. That's why it says here one of the requisites, existence of valid and subsisting debt. Second, ascertainment. How do you ascertain if the debt is worthless? Okay, excuse me. A debt is not worthless simply because it is doubtful value or difficult to collect. No? Dili kuno siya worthless just because it is difficult to collect. Worthlessness is not determined by an inflexible formula. There is no hard and fast rule to determine whether the debt is worthless, but it depends on the particular facts and circumstances surrounding the case. Now, what an example here, no, kung ang nangutang, the flight or disappearance of the debtor, no, if the creditor taxpayer exerted efforts, reasonable effort to collect, no, it may be justified that the debt, no, is worthless if the debtor disappeared, and in that case, the debt can no longer be collected from the debtor. Insufficiency of collateral. Now, in some cases, if you're going to loan money, you are not only liable for interest if the interest is stated in the contract. You are also some lender will also require collateral, no? Para ang loan, it will be secured by a collateral. Now, in the event that you cannot pay or you will default in paying the utang, no, then the property na collateral sa utang can be used, no, to satisfy the claim. It will be sold to satisfy the claim. Of course, kung bankruptcy or insolvent na ang debtor, you cannot, that will makonsider nimo worthless na. It is considered bad debt or worthless debt. Why? Because if the debtor, nangutang, is insolvent, his liability is more than his asset, then you can no longer di man imo na mapiga ang imuhang debtor na bayaran kung kulang wa nagid siya asset. Kay mas more than pa man ang liability kumpara sa asset. Okay? Loss of evidence of indebtedness. No, this is a case. No, loss of evidence of indebtedness when there is the proof, no, ang prueba nga naiutang nawala, no, so in that case, no, it can it be making the kanang utang, no, can be justified as bad debts or worthless to be collected. Because you cannot, there is no evidence of or proof of indebtedness because nawala ang kontrata, nawala ang document proving that there is an existence of that indebtedness. The other party, the debtor, in that case, can always assert, no, that he's not liable. What is the proof of the creditor taxpayer that he owes that money when that certain evidence of indebtedness is lost? Death of debtor leaving no assets. Namatay ang debtor, walay assets na pwede makadagan because debt cannot be passed on to the children. It's a personal obligation of the debtor. So in the event na ay debtor, namatay ang debtor, and then walay asset, no, any obligation with the debtor just who died, it cannot be transferred to the heirs, no. Pero kung nabili na asset, kanang asset sa katong namatay, mo ihapak sa utang. Okay? If it is insufficient, again, the creditor taxpayer can no longer run against the heirs. It stops on the assets lang ng debtor. Injury to debtor incapacitating him from work. Okay. So kung di makatrabaho, like for example, no, incapacitated, that will prevent the debtor Para magtrabaho ay makabayad sa utang. Absence of visible properties of the debtor, fruitless effort to collect small amounts from debtors scattered all over the country. So these are cases. It is the debt that is considered worthless, and it is an allowable deduction from the gross income as bad debts. What else? You have here, now can, whole amount ba pwede ma-deduct sa, depende kasi, now let's go to this depreciation. Now what is depreciation? Good morning. So let's
Depreciation.
Depreciation is defined as the gradual diminution in the useful value of tangible property used in trade or business, resulting from exhaustion, wear and tear, and normal obsolescence. So the term is also applied to amortization of the value of intangible assets, the use of which in the trade or business is definitely limited in duration. Kasi kung magpalit ka ng equipment, no, na ay ginatawag sa mga equipment as useful life, no, machines, equipment, appliances, dili man na sila, it cannot last during your until your dugay-dugay, no? We have what we call useful life of those equipment or machines. Now, how can sa mo pwede, like for example, if you're gonna buy, you are engaged into kaning naka-bakery na business, and then you bought mixer, oven, to what else, no? Other appliances. Now, how do you claim deduction? Do you claim the whole amount of sa pagpalit nimo ana nga equipment, or imo siyang spread out ang pag-deduct nimo based on the useful life of that equipment or machine? So, the necessity for depreciation allowance arises from the fact that certain property used in the business gradually approaches a point where its usefulness is exhausted. By using the property, a gradual sale is made of it, and the depreciation charge is the measure of the cost sold. So let us, persons entitled to claim depreciation allowance, let's first kinsa po mga taxpayer that can claim this depreciation allowance. So resident citizens and resident aliens can allows a deduction, a reasonable allowance for the exhaustion of wear and tear, including reasonable allowance for obsolescence of property used in trade or business. So who else? So you have also depreciation of property used in petroleum operations, depreciation of property used in mining operations, and another taxpayer can claim it is non-resident aliens. Aliens, foreigner who does not reside in the Philippines but engage in trade or business in the Philippines, and resident foreign corporation can also is allowed also to deduct depreciation. Now, what are the requisites for deductibility? Number one, the allowance for depreciation must be reasonable. It must be for property arising out of its use or employment in the business or trade, or out of it is it's not being used temporarily during the year. It must be charged off during the taxable year. A statement on the allowance must be attached to the return. So, reasonable allowance. No? So the computation, the allowance should be computed and charged of with express reference to specific items, units, or groups of property. Each item or unit being considered separately or specifically included in a group with others to which the same factors apply. You have different kinds of proper allowance for depreciation. You have an example here given by De Leon under 182, page 182. You have an illustration, a machine with a cost of 50,500, which has an estimated useful life of 10 years and salvage value of 500 after its useful life, should have an annual depreciation of 5,000 computed this way. So you have the cost, 50,500. Then less salvage value, so you have 50,000. Under the straight line method of depreciation, the annual depreciation will be 50,000 divided by 10 years equals 5,000. That's the example of straight line method. Now, the basis of depreciation. The capital sum to be replaced by depreciation allowances is the cost or other basis of the property in respect of which the allowance is made. To this amount should be added from time to time the amount or cost of improvements, additions, and betterment, and from which it should be deducted from time to time the amount of any definite loss or damage sustained through casualty as distinguished from a gradual exhaustion of its utility, which is the basis of the depreciation allowance. No depreciation deduction will be allowed in the case of property which has been amortized to its scrap value and is no longer in use. Hindi mo na ma-claim kasi scrap value. Deduction limited to capital invested. The law allows a deduction from gross income of depreciation but limits the recovery to the capital invested in the assets being depreciated. It does not authorize depreciation of assets beyond its acquisition cost. Okay, you have an illustration here. The taxpayer reappraised its asset in 1953 due to the increased replacement cost and deducted as depreciation the sum of 47,342.53. The same asset has been depreciated in 1952 by only 36,842.04, which value was fixed by the taxpayer itself based on the acquisition cost. It was held that the basis of the depreciation rate was the acquisition cost and not its replacement cost. Okay? And so you have also depreciation. How about if the property is intangible? Property that are considered intangible, those properties that cannot be, you cannot touch it. No? So you cannot see it, intangible. This example of which is the kaning mga patent and trademark rights, no, copyrights, patent, franchises. Example. What else? So, you have also depreciation of drawing and models, depreciation of patent or copyright, which I want you to read, depreciation of vehicles, method of depreciation allowance. Any method of depreciation may be used provided it is reasonable and must have due regard to operating conditions during the taxable period. Some of the most common forms employed are straight line method. This method spreads the total depreciation over the useful life of the asset. So the formula is the cost and then less scrap value, then you have divided by estimated useful life. You have an annual depreciation, the reasonable annual depreciation, which you can deduct from your gross income as depreciation. You will also have computation in declining balance method. This method uses a rate, usually 1.5 or 2 times the straight line rate, to the declining book value of the asset. So 1 divided by estimated useful life times 2, or 1.5 equals the rate book value, and then times rate equals depreciation expense. So you have an illustration given by De Leon. Working hours method, you also have in computing depreciation, it's another method. The total working hours of the machine until its retirement is estimated and a charge per hour is determined under this formula. So you can always use these formulas in determining the depreciation value, annual depreciation, for purposes of deducting it from your gross income. You also have unit of production method. This method is similar to the working hours method with the difference that the estimated service life is stated in units of products instead of working hours. Okay. Now you have deduction for obsolescence. When allowed, so if the whole or any portion of the physical property is clearly shown by the taxpayer as being affected by economic condition that will result in its being abandoned at a future date prior to the end of its natural life, so that depreciation deduction alone will be insufficient to return the cost at the end of economic term of usefulness, a reasonable deduction for obsolescence in addition to depreciation may be allowed. This allowance will be confined to such portion of the property in which obsolescence is definitely shown to be sustained and cannot apply to the entire property unless all portions thereof are affected by the condition to which obsolescence is found to be due. The taxpayer will not be allowed deduction for a... Now let's go to depletion. Now depletion is the
Letter I, depletion.
exhaustion of natural resources like mines, oil, or gas wells as a result of production or severance from such mines or wells. Now there are severance from such more gas wells as for depletion. Now depletion is the exhaustion of natural resources like mines, oil, or gas wells as a result of production or severance from such mines or wells. Now the purpose of depletion, the theory of the allowance for depletion, as in the case of that for depreciation, is that as the product of the mine is sold, a gradual sale is being made of the taxpayer's capital interest in the property. Depletion allowance enables the taxpayer to recover that capital interest free from income tax at its cost or on some other basis. Persons entitled to claim depletions. These are annual depletion deductions are allowed only to mining companies, mining entities which own an economic interest in a mineral deposits. In the case of resident foreign corporation or an alien individual engaged in trade of business in the Philippines, allowance for depreciation of oil and gas wells or mine shall be authorized only in respect to oil and gas wells or mines located within the Philippines. Now, methods of depletions, the tax code adopts the cost depletion method. Another method of depletion is the percentage depletion. How do you compute the cost depletion method? It is a method for allocating the cost of natural resource extraction or the unit produced. Okay? While the other method of depletion is the percentage depletion, wherein a mineral-specific percentage is multiplied by the gross income generated by a property during the tax year. So those are the method of depletion. So here are the rules. No, under depletion, here are the rules of where the cost of depletion will be allowed to be deducted. Number one, in the case of oil and gas wells or mines, a reasonable allowance for depletion or amortization computed in accordance with the cost depletion method shall be granted under the rules and regulation prescribed by the Secretary of Finance. When the allowed shall equal the capital invested, no further allowance shall be granted. After production in commercial quantities has commenced, certain intangible exploration and development drilling costs shall be deductible in the year incurred if such expenditures are incurred for non-producing wells and or mines, or shall be deductible in full in the year paid or incurred, or at the election of the taxpayer may be capitalized and amortized if such expenditures incurred are producing wells and or mines in the same contract area. Now, the limitation of allowable cost depletion, there is an exclusion. The basis for cost depletion of mineral deposit does not include those amount recoverable through depreciation, through deferred expenses, and through deduction other than depletion. Kasi di ba, ang depreciation, deferred expenses, meaning you will compute based on, example, on a straight line method, i-divide mo sa useful life, and that's the the result would be your annual depreciation that you can claim in your tax return. And other exclusion, the residual value of improvements at the end of the operation. Okay. So manner of computation of cost depletion. The cost depletion for taxable year beginning calendar year 1975, it's muli labot tong 1974 down, and fiscal year beginning July 1, 1975 shall be computed by dividing the adjust cost basis as of December 31, 1974 or June 30, 1975, as the case may be, by the number of units or minerals remaining as of the taxable year, and by multiplying the depletion unit so determined by the number of units minerals sold within the taxable year. Okay. So De Leon has provided illustrative problem on how to deduct cost of depletion. Depletion. Okay.
Letter J, charitable and other contribution.
So let's proceed to charitable donation. So this is the topic after depletion. Charitable and other contribution. We have two kinds of charitable contribution: ordinary, special. Ordinary na ay amount na pwede lang inimo i-deduct, special kung full. Now, deductible contributions, these contributions are gifts. Now, you have requisites for deductibility. Dapat the contribution must actually be paid or made to the Philippine government or any political subdivision or to the domestic corporation or association specified by the tax code. The contribution must be made within taxable year. The contribution must not exceed 10% of the individual taxable income, and if it is a corporation, 5% of the taxable income before deducting the contribution. The contribution must be supported by adequate records or receipts. So, ang donee dapat ang receive ang gift dapat para deductible siya, no, it must be to or for the use of the government of the Philippines or any of its agencies, political subdivisions, exclusively for public purposes. No? What else? To accredited domestic corporation or association organized and operated exclusively for na ay organization ang iyang purpose sa iyang pag-form sa anang nga corporation or association is for religious purposes, charitable, scientific, youth, and sports development, cultural, educational, rehabilitations of veterans. Even donations or contribution to social welfare institution or to non-government organization in accordance with the rules and regulation promulgated by the Secretary of Finance. The only limitation here, to social welfare institution, basta walay no part of the net income of that donee which will inure to the benefit of any private stockholder or individual. Now, contribution deductible in full. Those are donation made to the government, donation to certain foreign institution, donation to certain accredited non-government organization, mga NGOs, and under special laws, you have some entities that when you donate something, either cash or property, it will be deductible in full. You have the International Rice Research Institute, the National Science Development Board, the Philippine Red Cross, the Philippine Sports Commission, the Cultural Center of the Philippines, the trustees of the Press Foundation of Asia, the National Dairy Authority, the Integrated Bar of the Philippines. It is the association where I belong because they provide free legal services also. No? Development Academy of the Philippines, Aquaculture, Department of Southeast Asian Fisheries and Development Center, Child Caring or Child Placing Institution licensed and accredited by the Department of Social Welfare and Development to implement a foster care program. And last, the National Museum, Library and Archives. Okay. Now, limited deductibility. The nation's contribution gifts actually paid or made within the taxable year to accredited non-government, non-stock corporation are allowed limited deductibility in an amount not in excess of the 10% for an individual donor and 5% for a corporate donor. Now, katong namang full deductibility, katong special contribution, donations contribution or gifts actually paid or made within the taxable year to accredited government organizations are allowed full deductibility subject to the conditions provided under page 214 of your book. Now, exemption, kasi when you donate something, you will be liable for donor's tax. Now, exemption from donor's tax, donations and gifts made in favor of accredited non-stock non-profit corporation, non-government organization shall be exempt from donor's tax. However, not more than 30% of the said donation dili dapat mapaingon sa administration purposes ng said NGO. Now, under page 215 of your book, De Leon has provided illustrative problem on how to arrive on the contribution on charitable contributions. Okay, you have requirement of accreditation, formalities required also, and proof of deduction, dili necessary receipts. So there was a case wherein ang executive ng isa ka company nag-donate, no, but wala siya resibo na ka-attach. The city or the Court of Tax Appeal allowed it to be deducted, no, because it is not only non-presentation of supporting receipts, it's just merely for administrative, no, in order for the BIR to verify. Now, if it is very clear, no, if the taxpayer can adduce also proof other than the receipt, no, then it will be allowed to be deducted. Research and development. This is to also to encourage enhancement of business. You do research and development to improve your product, no, especially kanang mga sa agriculture. These can be deducted, but there are only limitation. There are limitations provided under the tax code. Know that the rules do not apply to any expenditure for the acquisition or improvement of land. Pwede ka na magpalit expenses nga mag-acquire o mag-acquire of land, dili na siya pwede. Or for the improvement of property to be used in connection with research and development of a character which is subject to depreciation and depletion, or any expenditure paid or incurred for the purpose of ascertaining the existence, occasion, extent, or quality of any deposit of ore or other mineral, including oil or gas. Dili nimo pwede mabutang sa research and development because this is just merely speculative. No? Pensions and trust. Kung ang company na ay pension plan, pension retirement plan, ihatag sa employee naman ay ang empleyado maghatag man, ang employer, ang company maghatag man ng contribution. So ang contribution ng company sa kanang pension plan, pwede ba na ma-deduct, no? So you have the requisites for deductibility of payments for pension trust. Number 1, the employer must have established a pension or retirement plan to provide for the payment of reasonable pension to its employees. Dapat na-establish pension plan. Dili pwede nga basta mag-donate lang then i-deduct. The pension plan is reasonable and actuarially sound. It must be funded by the employer. The employer contributes cash to the plan. The amount contributed must no longer be subject to its control or disposition. Kasi when you donate something, you are surrendering control over those funds, over those funds given. So kung nai-control gihapon ng employer, pwede siya magamit gihapon ana sa money, di pwede. He cannot deduct it under pension and trust. The payment has not been allowed before as a deduction. The amount is apportioned in equal parts over a period of 10 consecutive years, beginning with the year in which the transfer or payment is made. Kasi kaning mga pension plan, 10-year plan, no? Kanang mga retirement. Now, payments deductible. The payment to employees' pension trusts which are deductible are amounts contributed by the employer during the taxable year into the pension plan to cover the pension liability accruing during the taxable year, or 1/10 of the reasonable amount paid by the employer to cover pension liability applicable to the years prior to the taxable year, or so paid to place the trust in a sound financial basis. Illustration is provided by De Leon on page 223 of your book. How about requirements of reasonable retirement benefit plan? No, you have the requisite. It must be a definite written program. Dili lagi pwede basta-basta lang. It must be permanent and continuing program unless sooner terminated by virtue of valid business reason. It must cover at least 70% of all officials and employees if the plan provides eligibility requirement, and at least 70% of all officials and employees meet the eligibility requirement. At least 80% of those eligible must be covered. It must provide for the non-diversion of the corpus or income of the trust fund to any purpose other than for the exclusive benefit ng empleyado. Dili dapat makabenefit ang company nga or kasi ka ng retirement or pension trust plan, this benefits the employee. No? Dapat walay benefit na muri down sa company. Di pwede niya mahilabtan ang fund na giset aside for the employees for the retirement and pension. It must not provide for discrimination. It must provide for the contribution. It must provide for non-forfeitable rights. So those are the requisites. So last audio clip would be discussion of optional standard deduction and items that are not deductible. Now, optional standard deductions, the taxpayer who is not earning purely compensation income and not a non-resident alien can avail the 40% optional standard deduction, either the optional or the itemized. Now, the itemized, if you avail the itemized deduction, as I said, you need to go over those items, and then it should be properly categorized, no, ang imong mga expenses. Otherwise, it will be disallowed. No, the taxpayer is also allowed to claim via using the optional standard deduction, which is automatically 40% of the gross income. Will be deducted. Will be deducted in arriving sa net income, net taxable income. So, example, kay gross income na 1 million, and then you opt for the OSD rather than the itemized, then 40% of the 1 million is 400,000 to be deducted from the 1 million, arriving at 600,000 as your net taxable income. Hindi, basihan itong, remember the table or the graduated scheduler rate, depending on what kind unsa nga income, no, amount sa income nimo. So mo na dapat na percentage in order to arrive sa tax due naman, no? Kung pilang imuhang tax. So De Leon was read ang example given ni De Leon on page 228, 229 and 230. Now, special deductions, these are special rules for deductions. No? These companies are pre-need companies. You have estate and trust, also in private educational institution. Insurance companies, mutual insurance companies, mutual marine insurance companies, assessment insurance companies are pre-need companies. No? Except for estate trust, private educational institution. They have special rules for deduction. Now, items not deductible. Now, in most of the items sa itemized, na hindi nakabutang, no, one of the requisite is that it is imperative that it must be mandatory ka na in connection with your trade, business, or practice of profession. I-deduct man nimo ang dili connected. So, kung dili siya connected such as personal, living, or family expenses, then it cannot be deducted because it has no relation sa imong business. It is not in connection with your business, trade, or practice of profession. So any amounts paid out for new buildings or for permanent improvements or betterment made to increase the value of any property or estate, nag-add ka ng second floor, third floor, no, it does not, those are items that are not deductible. No. Any amount extended in restoring the property, no, or in making good exhaustion thereof for which the allowance is or has been made. Premiums paid on any life insurance policy. Kung nag-i-insure nimo ang life ng executive ng company, but ang beneficiary, ang company lang gihapon, it is not deductible. Kasi if once, what will happen to the president, the executive nag-i-insure ang life, naalay return of those premium, return of capital to the company. But if the beneficiary is the executive or the person, the insured, katong president or executive ng life insured, then it is deductible. Losses from sale or exchange of property between related taxpayer, because it is discouraged. So next meeting, we will discuss gains and losses from disposition of property. So I want you to bring your capital gains tax form, BIR, the recent one, if you can get one, and then if two separate forms yata na, no, you have sale of real property, CGT or capital gains tax on sale of real property and capital gains tax on sale of shares of stocks. Have a great day, everyone.